What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 15th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, we've got a wide range of key topics to discuss. We're going to start off by taking a look at the correction that we've had in cryptocurrencies, talking about whether or not we're at the end of this correction with the rebound we've had over the last few hours. We're also going to be talking about a very important topic in relation to altcoins where we might see a big shift in valuation that might fuel the altcoin cycle, and I'll talk about that later on in the video. We're also going to be discussing the Bitwise CEO's comments on the plausibility of a Bitcoin ETF coming soon, as the SEC's concerns might be coming cleared up in this case for a Bitcoin ETF. And last but not least, talking about the inverted yield curve in traditional markets and why this is yet again another piece of fuel in the fire for Bitcoin and other types of assets that are hedging against traditional markets. And along with that as well, with all of that, we have got an interview with Brian as well as Peter from spin.com. Two individuals who are heading up operations at one of the companies I recently became an ambassador for. So again, stay tuned for that, guys. It's going to be a really exciting interview. We've got lots of things to discuss. Let's go ahead and kick off the video. Well, guys, I don't think I could have done that without my morning cup of coffee. I usually don't have coffee in the morning, but I thought maybe for this occasion, it might be good. All right. So let's go ahead and dive into the market, guys. Obviously, we're having some turbulent times here in crypto over the last few hours. Most cryptocurrencies are obviously not in the green here. Most are down in double-digit territory or close to double-digit territory. If we take a look here, though, the main thing that I'm noting is that, again, Bitcoin is shifting dominance in the market. We right now have, for example, only 4% down here for Bitcoin. Bitcoin has rebounded quite strongly off of the lows. And we're not just seeing a lot of no-name altcoins in double-digit territory. We have some of the big players. Ethereum down 10%, XRP almost down 9%, Bitcoin Cash 9%, Litecoin 8%, and then even some of the other bigger players like EOS. So again, we're still seeing Bitcoin holding its dominance quite steady. We haven't seen that flush just yet. Now, speaking about an altcoin flush, and again, I want to make sure it's very clear. We will take a look at Bitcoin's price in just a moment, guys. But while we're on this topic of altcoins, I want to talk about what actually might be an additional kind of fuel to really kick off what is going to be, if there is going to be one, the altcoin cycle in this case. And that is going to be when a lot of the coin aggregate sites, for example, the one I use, who's a sponsor of the channel, CoinMarketCap, I'm really interested to see when a lot of these major coin aggregate sites are going to kind of finally implement their systems that filter out a lot of the fake volume. I know, for example, CoinMarketCap is working on that. A lot of these platforms are. And I feel that when that happens, I think, you know, guys, for example, you guys who are active on the channel, you've heard me mention a lot, you've done your own research, you know that there's a lot of cryptos out there that aren't listed on any liquid exchanges, they don't have any real trade volume, and in many cases, they're just simply artificially traded on no-name exchanges that don't have real volume or real crypto to back it up, right? Well, that's the major thing here. I think that when that filtering process comes through, it is going to be Armageddon for a lot of these false cryptos, for a lot of these wash-traded or excessively market-making, sorry, that's an odd way to say that. Basically, cryptos that are excessively fueled up by market making in this case with no real actual volume. The moment we actually get that filtering, I think a lot of the phony valuation in the market cap for other coins in this case, we have, for example, $83 billion in market capitalization here. I'd say easily 1/3 in that case of the market cap, 1/3 or 2/5 is instantly going to be given up from those projects and kind of pushed into a lot of other projects, or at least there's going to be room for other projects to kind of suck in that value. I bet Bitcoin will suck in some of that value as well. But again, it's just something to think about, and it might be something that might help in this case shift market dominance away from specifically Bitcoin and recirculate into other coins and other projects in the space. That's one thing I'd like to see. Now, in the sense of overall dominance, getting back on track to the daily review here, you can see here the major trend that I'm noticing is that we're obviously setting highs here for Bitcoin dominance at a slower rate in this case. So you can start to see the curvature here, again, around a very important significant point, which is 70% market dominance, same peak as the last cycle. Back in December for altcoins. So we'll have to see here if we can get past 70% here. There was another index for Bitcoin dominance that I use on TradingView and stuff, and supposedly it should have went up to 71%, but quickly across most indicators we're pretty much topping out around a similar range. We need to get a close above 72.5, 73% in order to really confirm that we're going to continue forward. All right, so taking a look at the TA here, guys, there's a few things I'm noting. Bounce here off of the 100-day Again, it's usually never perfect, so we usually go through the under the indicator a little bit sometimes. But you can see here, bounce off the 100-day moving average. Not to mention as well, factoring in the line of support here from the Fibonacci fan in this case. And we can see here that price has actually done quite well over the last few hours. So if we take it here to the 1 hour chart, we can see here that Bitcoin has been consistently going up here ever since it went down to the mid $9,400 range. So we're back above 5 digits, no longer below five digits. Not just kidding, but rock solid support at 10K. That's my brother and I always joke about. But the key thing here to take away is that anywhere in this range, guys, as I told you yesterday, anywhere around 10,000. It was the first range where I added in this correction from the peak at 13,000. Right? I told you all a long time ago. This is back all the way in. God, I can't believe we're already in August. It's back in June. Or sorry, no, it was July 1st when I did it. It was July 1st or June 30th, and I added at 10,180. And that was my first average in. But I also have averaged in a variety of points through here. I've also built some altcoin positions. But this, anywhere here along the support line, that's a steal for me personally, especially as time progresses here, and especially as the macro environment has really started to shape up to where I can feel comfortable holding Bitcoin. Now, one thing to take note of as well, in this topic, we're going to talk about a Bitcoin ETF, is a lot of people have said that, the past few days where markets have been in a sell-off in the sense of traditional equities, and there's been lots of fears in global markets, shouldn't Bitcoin be mooning in this case? Shouldn't Bitcoin be skyrocketing? And, I think it's a very fair criticism, but at the same time, I don't want you guys to misinterpret it, because it's important to understand that even hedges in this case, especially ones like Bitcoin that have yet to really materialize, I think on a global scale, and there's also not the entry vehicles for people to flight their capital out of equities into crypto in most markets. The fact of the matter is that gold, for example, in 2008, actually went down as well. A lot of people don't know this. It initially went down. Most assets across the world went down. And even those that are not, for example, yielding assets like gold and silver. And then lo and behold, afterwards had a parabolic rally between gold and silver. So there might be a certain delay here, and we might not get that serious and significant rally until there's serious rumors of something as a catalyst that can carry markets forward and prove that Bitcoin is going to be an optional hedge for the world. Because this next topic we'll talk about, this idea of a Bitcoin ETF, is really going to kind of segue us into this idea of, that we need a catalyst or something that's going to carry markets forward, right? I'm not saying it has to be Bitcoin ETF. Does not have to be, but I think a Bitcoin ETF is the most plausible here, because if you understand out of any solution just how eventually, once the SEC is in favor of a solution, once all of its needs have been met, just how simple it is to start getting these things out there, that's one thing. But along with that, just how much liquidity is locked up in pension funds that need an ETF, that need some kind of entry vehicle. So let me go ahead and explain. So first off, we've got the comments here from the Bitwise CEO. We all know Bitwise from putting out the Bitwise report, talking about 95% of crypto volume being fake, and again, kind of filtering down to the real volume. And again, I think the report was very much worthy of praise in what it did, called out a very necessary reality inside the crypto space. And along with that, I've contributed my thoughts to it and everything, but Bitwise is a pretty respectable company, as they do a lot of asset management for cryptocurrencies. Now, the major thing to take away here is that the Bitwise CEO believes that there is a plausibility of a Bitcoin ETF. Now, the thing I'd like to know is, if he's confident in this and that they've submitted their own proposal. I'm curious when they think the SEC is going to approve it, because we've been either getting, ETFs postponed or eventually rejected. Again, we don't have much details in this case, and I think even if he had a date in this case, it would be shooting in the dark. We have no idea when the SEC is going to be satisfied. But I do think it is something that we can plausibly see in this next cycle. And to give a comparison as to how I think it's going to play out, I believe that it's very likely for a Bitcoin ETF to play exactly as the Bitcoin futures did. That well ahead of time, there's an approval, and sometime in 2020, we get that approval. And then going into the peak of the cycle, whether it's late 2020, early to mid 2021, right when Bitcoin is peaking at around 80,000, 100,000. The sad reality is that it's going to become public. You'll be able to own the ETF. And a lot of people, whether it be retail investors, institutional investors, they're going to pour in when that ETF comes out. And that's going to be when the market is going to peak, similar to Bitcoin futures. I really do believe it could play very, very similar to how we saw the Bitcoin futures peaking out at 20,000. And it makes sense in this case because you buy the hype, you sell the news. That's kind of the reality of markets. It's always been the reality of things. And then again, you guys are going to be rewarded in this case for investing. Well, then again, I can't guarantee anything, but I believe as an investor right now that I'm going to be rewarded in this case, getting into this space earlier on and understanding the technology, spending the time to understand this market before others who are just simply either letting other people manage their money or just simply getting in on the hype. And that's a key point, that first point I brought up here, and why Bitcoin ETF is so essential. There's a lot of articles a while back, even one by Joseph Young, for example. He quoted a tweet here of mine, which I didn't notice it was Joseph Young until earlier today when I was refining the article. But a really nice guy over, he usually writes over for CoinDesk and a lot of the other crypto sites. But he quoted a tweet here that I put out, and it just talks about the significance of a Bitcoin ETF and the sense of liquidity, especially a physically settled Bitcoin ETF, in this case where there's physically backed Bitcoin behind each share. And the reason I said that it matters is because we need to talk about the scale of pension markets, and that's basically people's retirement funds in this case. And you can see that it's over $41.3 trillion, and we can do the simple math here. If we live off of the analogy in this case, or we plausibly consider that 1% of global pension funds across the world, mostly in Western markets, gain some exposure to Bitcoin. 1%. We're not talking 2 or 3, 5%. We're talking 1% in this case. This would mean that we would create over $413 billion of buy-side demand for cryptocurrencies. And it's important to note, this doesn't mean $413 billion in market capitalization. A big misconception people have is that they think that market cap is $1 in and $1 lost in market cap is $1 out. That's actually not true. $1 of new liquidity entering into a market is going to have more of a positive effect than $1 alone entered in. So let me put that simply. $1 put into the market is going to mean more dollars in market capitalization than the core dollar you're putting in. So if we're putting in $413 billion, this could possibly materialize trillions of dollars of value for cryptocurrencies, especially being new liquidity entering into the market, a lot of buy-side demand coming in. And if it comes in very quick off of the Bitcoin ETF release in this case, then that's going to, again, sustain the valuation in this case and be able to push it to higher levels. Now, again, the reason why the demand for this can come in earlier than expected before the ETF is released, that's an important thing to talk about, is that in this case, if it's physically backed, the Bitcoin ETF is physically backed, you have to buy up the Bitcoin in order to back the ETF. And I think the SEC is going to opt in for that. I think that's the proper and right thing to do. We don't need what we have with gold, which is a massive paper market on top of a very limited supply of gold. And along with that, either way, there's going to be a lot of hype coming in this case where people will pay that premium, as we've seen in markets, when it comes towards kind of preparing for these new financial products. So hopefully that makes some sense. And again, there's one final thing I want to talk about. One of the top comments was, of course, it was a point of criticism, but I actually like that he brought this up. And this guy brought up and said, "Grandma can't wait to market buy our bags, folks." He's basically saying no one cares about buying Bitcoin and they're not looking forward to buying it at a higher price. Well, first off, history does tell us, yes, they will pay at a higher price, but it's not going to be grandma who's managing her assets. It's going to be a few money managers who are the pension fund managers who are going to be gaining some exposure to it. Because A, there are a lot of people who do want to get exposure to crypto, and B, for those who don't, either way, when your bonds are negative yielding, when your stocks are plummeting, and when the only things that are going up are gold, silver, and Bitcoin, yeah, I think grandma's going to want a little exposure to this hedge, even though she might not understand the technology. It's kind of the point of an ETF. So anyways, don't mean to be snarky about it, but, understand what my point is in this case. That's I think so many people miss the essential nature of an ETF in this case. And trust me, I want people to manage their own keys. I want people to actually own their own crypto. I would much rather it not be in the hands of a big ETF manager, and I don't think your finances should be managed by pension fund managers. But you know what? It's the reality of the situation. And we're either going to make it extremely difficult for people to make that transition on a global scale, where a lot of people don't know how to work with these kind of tools just yet, or we can expedite it and allow people to get some exposure at a time where it's really needed. So speaking of being a need right now in the sense of the market, even though the futures have rebounded a little bit here, we have seen that this is after a pretty stark sell-off. Yesterday was one of the, actually I think it was the worst day in 2019 for the Dow Jones. Biggest point drop in a long period of time. You know, we rarely get these kind of big point drops. And again, we're getting towards a larger market, so I think it's much more important to look at percentages. But it was a good, 2.5 to 3% down day. So pretty significant stuff after an already pretty stark correction that we've had here back during the end of July into the first week of August. Now, why is fear brewing in? Something happened yesterday, and that is that the 30-year, actually two things. Not only did the 30-year yield hit a record level, in the sense of its yield to the downside. So lowest yield recorded in history. But along with that, the 10 and 2-year yield have inverted. Now, let me explain what this is. So there's really two factors that come into case when you're talking about bonds. You have the price of the bond and you have the yield of the bond. What a lot of bond investors care about, I would say traders more actively care more about the value in time in this case. Because if you're buying a bond, the major thing that you're looking for is the yield. That's what you care about, right? That's the thing you're going to get on an annual basis to hedge against inflation. In the case of a trader, people trade bonds, but the majority of people who are in bonds are investors. And the thing is, it's usually that if you give up your capital for a bond in this case, so the government can generate a bond, get capital, then it needs to fund its expenditures. If you usually invest in a longer 10-year treasury note, in this case, for example, you're supposed to get a higher interest rate. Makes kind of logical sense, right? You're putting up your capital for a longer period of time, and the longer you're investing, it's like a bigger bet and trust in the government. Well, the 2-year, if this sounds shocking to you guys, the 2-year is now yielding a higher rate than the 10-year. So this has happened before in history. This is what's known as the yield curve inversion, or the inversion of the yield curve, however you want to word it. And this basically means that people are basically losing trust right now in the current system. There's more risk in the short term than in the long term in this case right now, because we're obviously in a very odd scenario. People are worried about a recession. I mean, we've got lots of macro things that are still brewing on: China trade war, Brexit, monetary policy mismanagement, currency crises, you name it. And you just see gold and silver spiking. So I think this kind of this jolt shock that's come in has really gotten a lot of people concerned, and a lot of people, again, in the bond market starting to reflect that. So as this continues to worsen, this is definitely going to be a warning sign. It's showing us that this isn't, people just complaining and saying, oh, the recession's around the corner. No, we actually are going towards the shift here. We are shifting the cycle. Whether or not U.S. markets are going to tank just yet, or severe as other markets, I can't stand in defense of that, or I can't say that that's going to happen. I believe U.S. markets and the U.S. dollar are going to remain as strong as any other kind of country or any kind of major country or currency. And along with that, taking into mind, the major thing here is that there's going to be a global exit out of equities in this case and other assets such as properties. We are going to see people stepping out of risk and stepping into hedging assets. That's the major thing here, guys. It's the longest economic expansion in history. You kind of get down to the point where you have to have a turn down. How severe is it going to be? I don't know. I won't say it's going to be as bad as 2008. I'm not too certain of that just yet. We'll have to see what the negative yielding bonds do, where all that money flows to. Anyways, I've talked enough, guys. I hope you all enjoyed this video today. We talked about a lot of different relevant things, but I want to let you all know we are going to kick off right into our interview with Brian as well as Peter from Spend.com, and we're going to be talking about a variety of different things. For those of you who don't know about Spend, Spend is a cryptocurrency debit card that allows you to spend any kind of cryptocurrency that they have within their wallet at a variety of merchants. It's partnered with Visa and MasterCard in this case in order for you to actually be able to use it at point-of-sale systems. And then along with that, they have a lot of strategic partnerships such as Paxos and other companies that I really admire in the crypto space. They've been really eager to work alongside other projects in the crypto industry. But not to mention as well, they recently came out with something very interesting, and I thought I'd share it with you guys. For those of you who might be building any kind of applications out there, I know there's some of you out there who are building in this new bull market. The thing I wanted to share with you all is that Spend has recently come up with Spend Business, and it's basically a spinoff that's focusing on white labeling their network and their products. So you'll be able to use Spend services, connect to not only their APIs, but also get access to their SDK in order to build applications across the current Spend technology. So again, further driving Spin's technology to a lot of other systems and being able to expand cryptocurrency merchant adoption, which is really cool. All right, so I've rambled on enough about that. Let's go ahead and jump into this interview, which I'm really excited to have onto the channel. So let's go ahead and talk with Brian and Peter. Alrighty, everyone. So let's go ahead and spend some time to focus in on talking with two individuals that I really admire as they're pushing forward developments in the payment processor and merchant solution space for cryptocurrencies. They are tied to the project Spend.com, which I recently became a proud ambassador of. Today, I'm sitting down with Brian Woods, who is the founder of Spend.com, as well as Peter, who is the chief marketing officer for Spend.com as well. So, guys, thank you for making the time to come on. I really appreciate it.
Thank you, Nick. Thanks for having me.
So anyways, guys, I want to spend some time to start off very simply and asking about, kind of how you guys got your backgrounds in cryptocurrencies. I think, Brian, seeing as you're the founder of Spend and stuff, I'm real curious, what got you drawn into cryptocurrencies in the first place? I've met a lot of people who've worked in kind of merchant payments in the past, and they've kind of seen the inefficiencies. Is that kind of how you got your roots into crypto?
Yeah, I've always been a journeyman in the payments industry, and when I saw cryptocurrency, it made a lot of sense just because it's less fees, it's easier, quicker payments, it removes third parties, and it makes it easier to spend your assets.
Yeah, I think it's honestly, there's a lot of prevalent things that come from people who have kind of seen the inefficiencies, not only kind of the things that are prevalent to most kind of consumers and also maybe merchants who are taking payments with the kind of crazy fees that you can get sometimes having to deal with a third party, but along with that as well, not to mention there's a lot of things you'll see on the back end in that case. So now that we're talking about kind of crypto as a merchant solution in this case, what's the biggest barrier to getting merchants to accepting cryptocurrencies right now? I can think of a few off the top of my head, as I've been a really big advocate of trying to get people spending crypto. But what are some of the things that have been getting in the way of people using crypto that you guys have seen?
I think standardization, regulatory framework. Once all the regions come together and agree on how to manage and handle cryptocurrency, you'll see mass adoption. I think we're getting there since the early years. But really right now it's just coming together and standardizing how do you manage in each region cryptocurrency, whether it be Bitcoin, Ethereum, what have you.
Yeah, so is that mostly like when we're specifically talking about kind of like a regulatory framework, does it have to do more with like custody, or is it, how do we tax it? How do we, in a regulatory manner transmit value in these networks? So I'm just kind of curious as to what that might be.
Right. So it comes from, it's really region based, right? So for the U.S., for example, you have the Patriot Act. You have to understand source of funds, OFAC checks, compliance, know your customer. As well as know your transaction. So you've seen a lot of companies surface recently that assist and ensure that Bitcoin and source of funds aren't coming from the dark web. And so really, as these standards come into place, the traditional banks and governments really get a lot more comfortable in the space, as you've seen with like the SEC and different regions around the world.
Interesting. Okay, so building on this as well, how does Spend exactly work towards getting more merchant solutions? So you guys are I would say kind of in the space of the crypto debit or credit cards that allow people to spend cryptocurrencies. And the way I see it, from what I understand, it's basically an instant settlement where you would liquidate the cryptocurrency, in this case that I decide to spend after I've kind of swiped my card, and I select what crypto I want to use. So how does Spend kind of work in the background outside of what I just mentioned? I mean, it seems like a very nice, simple model, but I'm assuming there's so many more other pieces in the background that are moving.
Yeah, we've built a global infrastructure and partnered with a lot of service providers that allow us to not only spend cryptocurrencies, liquidate assets, but also fiat currencies as well. And so it's with the Spend network, we're able to make spending cryptocurrency easy. Right. Typically, we work with traditional banks in each region. We also work with large exchanges in those regions. And so we're kind of doing a magician's trick, if you will, that allows us to liquidate your asset, but at the same time work with major network associations like Visa to settle that transaction with merchants.
So basically, like in this case, what you're doing in this case is you're able to connect to the traditional gateways, in this case between Visa and MasterCard. So you're able to basically, just like anyone who might have a Visa or MasterCard debit card, be able to settle transactions real time. We did a demo actually on the channel a while back that demonstrated that, where basically I went out to shopping at a Chipotle, one of my kind of guilty pleasures for lunch, but I basically went out to get Chipotle, and I actually used the spend debit card, and it settled just as quick as a normal debit card. And that was a really fascinating thing. I thought there was some kind of time delay or something, but it actually worked great.
Right. Yeah. So we're actually working. We're the custodian of the digital assets, working with the exchanges, and so utilizing the Visa network. Everything's upstream. So you have your spend wallet where your digital asset sits. You would toggle or enable the crypto asset of choice for spending within our spend app. And then using the spend card, you simply would swipe it as you would with 40 million different locations with Visa. And then we work in the back end using our spend authorization engine to allow that asset to liquidate. And at the same time, we push funds to settlement on the Visa network.
That's awesome. And one thing that I'm always curious about, Brian, and I think most people probably are, with any kind of debit card or credit card, especially in the United States, we love some kind of reward when we spend our money, and especially if we're going to be spending crypto and stuff. So what are some of the rewards that people can expect when they actually use the spend debit card?
So we have what Spend Coin, which is digital cash, and so there's rewards back. So as you spend, based on your tier, whether it's Spend Simple, Spend Preferred, or Spend Black, with each transaction, you're given a percentage back in Spend Coin. Spend Coin is the utility token that's used within our ecosystem. So you can take that coin to make purchases towards a higher membership tier, or to convert back to Bitcoin or Litecoin or the coin of your choice.
Yeah, so that's the thing. That's one thing I was always curious about. When I first heard about SpendCoin, I was wondering where the demand would come. But you guys have that established where if you want to get maybe the higher tier cards that Spend offers, there's about 3 different cards that you guys offer at the moment. In order to get those higher tiers that have better rewards, better deals in this case, then you have to stake some of the coins in that case in order to obtain that wallet, or actually obtain functionality of that new debit card. So now we talk about that. I think that sets kind of the demand framework. How do people kind of gain access to the Spend network? Kind of who has the opportunity to use Spend in this case as a payment solution? I know you were talking about that the fact that you have to connect with banks, you have to follow regulations. It would seem very difficult to get this on mass scale into a variety of different economies. So how have you guys done that? How far have you been able to go so far?
Right. So for 2019, our number one objective is to get the Spend brand and issuance out globally. So up to today, we're launched in U.S. and we're launching in Canada. We'll soon be in Europe as well, with our final pivot to Asia in Q4. So certainly right now we've almost succeeded in covering that objective, and I believe, I'm confident that we'll do that by end of year, focusing on South America in 2020.
That's awesome. And I'm glad you guys are focusing on South America going forward and stuff, because it's such an important, I think, geographical region for cryptocurrencies. But more importantly, I think the fact that you guys have been able in a year, I mean, I don't mean to talk crap about other competitors in the space, but I mean, I've seen there's been a lot of players who have come in the space. There's been 10x, there's crypto.com. There's a lot of other people who have tried to do crypto debit card solutions, because I think you guys, just like they, realize that this is something that's going to be needed in order to transition people to being comfortable with crypto, at least in the West. We're so used to debit cards, right? So I think that's awesome that you guys have really pushed this. You have basically the whole kind of framework here. You've got the traditional payment gateways that allow people to settle real-time transactions on traditional payment networks. You have the lending framework. Now, I know people who watch the channel, they know I'm a huge fan of pretty much any of these basic platforms that allow you to earn interest rates like you used to be able to earn in the United States, from like 6 to 10%. And then even some of the decentralized solutions that are out there. But then also as well, you guys are working close with Paxos, which I have to say, out of this stablecoin space, with how many competitors there are, for the ones that are pegged one-to-one, Paxos is probably, in my opinion, one of the most professional ones. I've met people, I met some at Consensus who are working on the Paxos team, and they're one of the few that I feel has a 1-to-1 ratio for every coin they have. They're highly regulated in New York City, and I think as well, I think that's awesome that you guys, not to mention as well, have this huge open access to working with other people. You're not trying to compete. You're more trying to work with other projects that have been leaders in the space that do what they do best. And I think that's going to help you guys be the #1 merchant solution. And I want to bring in Peter here. Peter, you're working on the marketing front here. In the case of people wanting to get involved, not only just maybe getting a spend card, but also with helping to push the spend ecosystem, where do they go? What are the best places to go to check out more about spend.com?
Yeah, for sure. And definitely check out all of our social media channels. We're active on there. So we really want to implement an influencer program as well. So if people can share their experience while using their spend card, how you mentioned with your Chipotle experience, we love videos, we love interactions, and we'd be happy to like reshare and retweet that on our channels as well.
Awesome stuff. Well, guys, I got to say, I think you're doing a lot of great work for the space in cryptocurrencies in general. I mean, being able to tie into a lot of these new kind of lending or DeFi platforms, not to mention as well being able to spend your crypto. I think it's going to be the first kind of inch in this overall movement of trying to get people to use cryptocurrencies more frequently than just simply staking or investing. Because I think it's one thing, you can stake and invest it long term, and hopefully we all make a profit investing in cryptocurrencies. But at the end of the day, we've got to spend it on things. We've got things in our daily life that we have to spend money on. It'd be better off if we spend a little bit of it with cryptocurrencies. So Brian, Peter, thank you guys for making the time. I appreciate you coming on, and best of luck with everything you're doing.
Yeah, cool. Thank you, Nick. Make sure to check us out at spend.com. Download the Spend app on iOS or Google, at the Android Google Play.
Awesome. We'll leave a link for that down below in the description, guys, if you want to check it out. Thank you all for joining us on this call, and we will see you guys in the next video. Stay tuned.
Thanks, guys.